Now, the problem with this and why a lot of people don't do this is because they're like, I don't want to draw a red flag by showing that 1099 to the IRS and then putting it on my tax return. Hi everyone, Payton Gillis here from REI Tax University, where we talk all things tax planning for real estate investors. And today I want to talk a little bit about the Augusta rule, but what I want to talk today about is some buyer beware items, some things that you want to make sure you get right if you're going to utilize this deduction, because it is a good deduction, but it is one that you have to get right and you have to make sure your I's are dotted and T's are crossed. So some things to know if you're utilizing the Augusta rule. If you need to know more about what the Augusta rule actually is and how to use it more effectively, so as a quick breakdown, the Augusta rule allows a US taxpayer to rent their home to a business or to someone and not pick up the rent income for taxable income. So then it also allows, if you own your business can rent your home from you, can rent your primary home for up to 14 days and get a rent deduction for the business, and you don't have to pick up the rent income on your personal tax return. So this all seems like a win-win, but we need to talk about some things you have to be aware of when you're going after the Augusta rule. First, your business needs to be set up as an S corporation, a C corporation, or a partnership. The Augusta rule will not work if you have a sole proprietorship or an LLC disregarded entity. So if you don't have an S Corp, C Corp, or partnership, you cannot use the Augusta rule. Second is you need to determine fair market rent, and that's what you need to use. So you should be able to figure this out. If you're utilizing your house for more of an event type thing, you can look in what are event rentals for that space that you would have, the business would have to pay, and you're using your house for that. Or if you're using it more of a, not a hotel, but like that type of a thing for what you're doing with the business, that you're just using it, that the business rents out office space or rents out that for the day. You probably should look up more something like an Airbnb or get that fair market rate from one of those sites of what you can do for the day. The next step is you want to have a legitimate drafted lease agreement between you and the business for what you're doing. So just as you would with anyone else or anything else, you're going to have a lease agreement in place. From there, the business actually has to use the house, and you should document that as much as possible. So document when, why, how the business used the house, what all was done there, and document as much as you can on that, and then have the business use the house. The business pays you personally, should actually happen, right? So make sure those funds move, that the business pays you personally, and those go the business account into your personal account. Now, an added item here that is probably a good idea to do would be, if you need to, if you're in an entity that needs to, potentially issuing a 1099 MISC, a 1099 rent at the end of the year from the business to you personally that shows, hey, we paid him rent. Go ahead and show that on your personal tax return and then show it coming out due to the Augusta rule. Now, the problem with this and why a lot of people don't do this is because they're like, I don't want to draw a red flag by showing that 1099 to the IRS and then putting it on my tax return. But technically that's how it should be done. And at the end of the day, you want to do things right. You want to do them by the books. You could do that and you could defend it 100%. You have the documentation to do it, and that's how it should be. And then the last thing to be aware of with this is you get one or the other for each business. Each business can only use the Augusta rule or the home office deduction. And so you can't use both. You can't double up on it. So don't try to do that. If you do that, one will definitely be disallowed. And if it gets found out about, you will get in trouble on that. So you can use one, home office deduction or the Augusta rules. So look into them, find the one that's most advantageous for you and that works the best for you, and utilize that. So the Augusta rule is a real thing. It can be used to get you thousands of dollars in real tax savings, but it has to be done right. You need to do the homework to do it. And if you're not willing to do that, then don't go after it. But once you understand it, if you are willing to do that to get the tax savings and it makes sense for your business, then by all means go after it, do it, and do it right. Guys, thanks for tuning in again. Payton Gillis with REI Tax University. If you found this content useful, helpful to you, definitely like, subscribe, follow us here for more. Go over to reitaxu.com. Check out what we're doing in the tax planning community for real estate investors over there. Consider joining that if you want many more resources like this and you want to get that office hours, case studies, things that we're doing monthly over there. Jump onto those, guys. I appreciate you.